following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you're having a good Friday morning here. We're going to immediately take a look at the Shanghai, broadcasting from the lovely country of the Philippines tonight, as we'll be doing for the next 2 or 3 weeks or so. Let's take a look at the Shanghai really quick while we're in the spirit of talking about Asia. Talked about this, the week before last. It talked about the little compression thing it was doing, this high or low situation. And then we had a profile get really thin and in force here. And talked about this, you've been able to kind of edge higher and play defense against 2964. And lo and behold, talked about one of those cases where we looks like we don't want to be shorting against those inflection points. And now we popped our head up this week. And looks like we're going to close because, guess what? The Friday market is closed in Shanghai. That's kind of nice. So we also had a profile appear below price action on our daily the next time frame down. And it was a great phone call yesterday from a gentleman named Robert up in Buffalo. I'm going to try to explain a little bit more as I go forward here instead of just kind of throwing darts at the board and flying through things and talking about numbers without really too much of a dissertation on what's going on. So again, weekly breakout on the Shanghai on the upside, daily profile appearing below price action. And as we look at this on our daily, that weekly breakout along with that profile appearing below profile below, appearing below price action on the daily is generally good for longs. And no, I have not been drinking tonight. So 3108, we closed today. Again, super bullish for the Shanghai. And remember, if you kind of pay attention to that thing, once we start breaking the spine of some of the technicals on this particular product, this thing can really, really goose it up pretty good. So be prepared for some upward movement in the Shanghai. That's where the edge is, in my opinion. And again, now you've got a chance to play defense, which is more important on the long term below 3069, being long the Shanghai. All right, so let's see what's going on in the den here really quick. SSE, and we'll take a look at that in just a second. John from Philadelphia. We're going to take a look at the SSE in just a second. So I want to hit a couple of things that I spoke of near the close yesterday. And we try not to pull a Kramer every day. And you know what's so cool is starting this show at night instead of in the morning. It's like my brain activity is a little bit better. It's kind of nice. Maybe it's nice for you guys. Here we go. Crude oil. We talked about this yesterday right on the close of the show. And we talked about trying to lever against this 47.53, this weekly number. On the weekly on crude oil, as it kind of was hovering around that area yesterday while we were ending the show, and we reached a high since we talked about that of 48.75, and we're sitting and hovering around 48.03 right now. So remember 47.53, that unfair high on the weekly, and we try not to pull a Kramer and just kind of leave you guys hanging and don't talk about it again if something's wrong. We want to just kind of do a little repair here and make sure that if you got into the deep end of the pool on this one, which, really we always look for high probability setups and try to leverage these long-term inflection points, especially when we're kind of in a, possible defined downtrend as we had broken down below this 46 general area before. What do you do now? Well, in my book, as we pierce these weekly unfair highs on a profile that's not really that wide, you got to be willing to at some point say uncle and say, you know what, I either got to try this again as we get below 47.53 or add up or change the position to long. So in my mind, I look at this simply, I like to kind of clear the air, clear my mind more than anything else, and put stops in relative to the height of the profile itself. So I'm stopped out. I want to see where the weekly close is now. Remember, a weekly closing crude above this 47.53 is going to be pretty damning for the shorts. But if we can get a weekly close below 47.53, I'm not opposed to actually getting back in the water on the short side. So now this is kind of a wait and see, and that's basically what's going on here. Let me pull up the SSE here real quick. So that's the situation on crude oil, and let me get the SSE up here. The Shanghai Stock Exchange, is that what you're speaking of? Okay, sorry, misunderstood you there, John from Philadelphia. I was on a totally different planet. All right, so let's just read through some of the things in the den, because the question is, what security do you trade when dealing with the SSE? Believe it or not, and again, I know there's some other sponsors on the network here on TFNN. I've got a brokerage account at a place where I can trade securities on the Shanghai, and I go generally into, I'm going to go into my indices. I'm going to come to my indices profile heat grid here, and I'm going to pull up the Shanghai wherever it is. Let's pull it up. Should be near the top on our intermediate, and there we go, second from the top. And I look for, again, I kind of try to turn the rents the same way as we do talking about some of the weak stocks and strong stocks in the S&P on a daily basis. Try to find the stocks that were already showing themselves as relatively strong stocks and then relatively weak stocks, and try to define which ones are which, and then try to stay away from the relatively weak stocks and try to buy ones that are either already trading above profiles, already have broken out, or in some form of a defined uptrend sitting on support. And there's a lot of different ways to find that. So and I apologize for people hit me here. So the same general concept as we use on the S&Ps, we're going to look at the same situations on the Shanghai. So, what sorts do I want to look at? What kind of sorts do I want to look at here? I want to go into some custom sorts, and I want to say, what's been breaking out? And it puts those candidates on the board. Some of the things that had broken out earlier in the week, Dalian, Daxian, Enterprises hold. I mean, things like this that are already kind of moving up. Let's just take a look at another one, and you can find a bunch of stocks in there that are meeting some breakout situations, strong uptrend. You can look also at, let's see here, uptrend support right there. And we're going to talk a little bit about this further when we come back from breakouts.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. So finishing up with the Shanghai and just the conceptual part of this question, or the answer, I guess, was looking at this one right here, China Enterprises Company Limited. So, here's one, the sort is uptrend support. So, again, you got to kind of drill down into this and look at this a little bit. So, even though, this is the type of stock you want to probably stay away from. I mean, even though it's in this particular sort, it's at support. Remember, you want to try to find things that have either broken out early or are coming down into support in this type of sort. For instance, CITIC Securities. Oh yeah, okay. So here's a daily, kind of ugly after the breakout, but this is kind of one I would, as opposed to the last stock in this particular type of sort. Again, I love to play defense, and this is where I can kind of say, okay, you know what? We broke out early last week. We kind of rattled around here, come back to it. You've obviously got better long candidates, but this is one that may have just come back into a nice little support area, top of the box on the weekly, and the Shanghai moving up. It's going to, rising tides lift a lot of boats here, but People's Republic of China, gotta love the name of that stock. Not a lot of great action here today or this past week, but again, I like this one. This is obviously broken out early. It's kind of outperformed the market lately on the Shanghai. We're coming, not the best performer this past week on the breakout, but I like being able to play defense on something like this. But again, you probably got better candidates by looking at another sort to find strong candidates, not necessarily ones on support. When you have a breakout, you want to be, finding stocks that are just acting extremely well in the breakout. John, I'd love to answer that question, but I might be. He's asking what broker do I use to trade Shanghai equities. I'm gonna not say it because there's other brokers I think sponsoring this network, so we're gonna leave that alone, if that's okay. All right. So here we go. Going back into the scanner, we can do quite a few sorts here, obviously in the S&Ps. But what we want to do is I want to go back to the S&Ps again, being the polar opposite of Kramer here. we talked about, where's the edge when we trade the S&Ps, and I tried to give a little bit more paragraphic answer yesterday to some of the questions that Robert had. And 2183.50, we had some resistance there in 2182.50. So about pre-market, I think we were around here. So we had that 2182.50 and 2183.50, and we talked about, where's, is the edge really to kind of back the truck up here and get short against those unfair highs on the daily and the 240? The answer was no. I mean, you want to try to trade with what's going on. We had a little bit of a heaviness in the breadth calculations. We finished up kind of high yesterday, but we were looking a little heavier here on the opening. And again, we're kind of coming off those from overnight. Those numbers of 2082.50, 2081, 2182.50, 2083.50. But really coming off 6 or 7 points and just kind of staying within a fair auction on the 240 and the daily here. If I can get my charts to change, this is really nothing to write home as a massive victory when playing with fire. So again, the edge is still trading with the trend, looking for support on the long term, buying breakouts, blah, 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 blah. So not as an exciting situation as trying to, find the high print and, be the big hero. But again, that's a dangerous game. We talked about that with NVIDIA yesterday. I'm going to kind of revisit that one. And I kind of blindly am looking at this. I haven't really done a lot of research on it fundamentally or technically since yesterday. But, we talked about, is it turning around? I mean, is this the one where you kind of hear ultimately a big whoosh sound? You want to let somebody else kind of figure that out and let them be the hero. And let me see if I can get my charts to change here. There we go. Are you guys seeing any delayed action in my charts? Are you guys seeing the charts okay today in the den? I hope so. But this is what we were talking about yesterday. We had a couple of things. No new profiles on the weekly appearing on NVDA. And then we had a profile appearing below price action. And, we talked, I think it was Eric from Brooklyn we talked to. And, the question was, this thing's kind of gone up too fast, too high. But when you have these technical things going on and no headwinds really on the long term, the weekly, and then the daily's got this kind of new stake in the ground and that really important profile appearing below price action, those are very bullish signs that you don't want to play around with. Thanks, Paul. Saying the charts are okay here. Tucker, that's what that's what coffee's for. I'm just kidding. I know it's early in the States, and it's really wild doing the show at night here. It's just a whole different feeling. Gold, again, playing around with 1347.8. This has been really disturbing to me. We just can't get away from it. But that's kind of the good news is, we're consolidating. We're in that uptrend. We don't want to come off. And I still love gold from the long side. It's just you got to be able to kind of draw the line in the sand somewhere to be able to orient stops. And unfortunately, this 1347.8 has been something I've been paying attention to. And it's just been kind of gyrating around the bottom of the profile here on the daily. But let's just kind of really take a step back here. Now that we've made this move up in gold from that breakout at around 1110, was it? Somewhere around there on gold. Again, profile appearing below price action on the long term, very long profile. And now we've got this new one that's been enforced for about 4 weeks. And that 1366.70 is that unfair high. This is the December contract. We haven't been able to get through there on a weekly close. But, the premise, again, just as we looked at, the S&Ps last couple of minutes, this is something that technically still looks relatively good, and compressing up into this 1366.70 is not a bad thing, and we've kind of continued to make higher lows here while doing it. So I'm still a big fan of trying to find long opportunities, and especially buying those breakouts above 1366.70. All right. Notes, just hitting the usual suspects here, guys. I just don't see anything wrong with finding possibilities on the long side on the 10-year, and I'm going to keep playing that game till they tell me not to. Guys, we'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. We were looking at the 10-year and just, basically like a broken record talking about long opportunities, and that's still the case, folks. So let's move on, and let's take a look at a currency or two here. Man, if you're running servers and you're trying to do currency data calculations, and you see how these things trade so violently, these ticks just go by like maddening wildfire. You can't run too many of these on the same server. So I wish they'd just slow down. Here's the Aussie dollar. Let's hit the euro really quick first. Let's talk about something I hate, the euro going up. So, I talked about this trade. I was a little wrong on this trade, but again, this has been something that I don't mind being wrong as long as there's a hedge on and just kind of waiting it out. So this has kind of gone beyond where I thought it was going to go. But again, when you buy insurance plans in general, you try to cover disasters that may happen. And this is not a disaster if you have an insurance plan and you want to stay short and just kind of twiddle your thumbs and wait for it to break down at some point. It may not ever happen, but those insurance plans cross out the underlying, as you know. And buying in the money calls against a underlying instrument like this, you pay even less for the insurance, but you have to have a bigger move on the downside in this case to really take advantage of it. You need to kind of get going on the downside to really kind of have those calls keep their value a little bit with the volatility increase, and then the underlying, you basically got unlimited upside. So that was I was hoping for more of a Brexit euro kind of decoupling. Here we go. So, and the targets on the euro again 109, and I was hoping even lower, but you've got a big inflection point up top here on the going back to the euro 114.65. That's the big inflection point up top that we really reversed off of to some degree back in 1st of May. All right, so let's take a look at the British pound before we hit the Aussie. So we talked about some borders being crossed yesterday, getting them back above 130.19 and 130.82. We're starting to sink today. So again, we talked about a weekly close being really, really important. I mean, I think it was yesterday we were talking about this. Above 130.19, above 130.82. We're kind of 130.69 as the time of this show right now. But again, a weekly close above that DMC is going to make things a little more attractive on the long side. So I'm kind of in a wait and see mode since it's Friday. Again, you kind of want to use those weekly closes as a pretty good barometer of what the new edge might be in the instrument from the long side. And taking a look at this Aussie dollar, let's just look at the weekly here. Again, we reached some targets up top, 77.46. We talked about those being the targets from down below. I'm really, really partial still towards the long side of this trade, but just like we've talked about, sometimes when you meet the targets, you just got to wait and see. You got to kind of let it either break out again or just let it come down to support again. And what the cool thing is right now on the Aussie dollars, we are getting into this support area in the intermediate. So can you try to pick some points up here, leveraging and get 75.87 on the long side? I don't mind that.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.
Hi guys, welcome back to the show. So we were finishing up with the Aussie dollar and talking about support at 75.87. Standing by that. And apologize for the disconnect we had. Let me pull up our futures server here. All right, so let's go into copper. Let me restart this one. And thanks for hanging in there, guys. Sit tight. We're going to restart this from the disconnect. Here we go. Okay. All right. So we're back on track here. Let's go down to copper. I had a question about that one. Yeah, I guess the question is, are we below the weekly but still above daily unfair lows? When do you pull the trigger and sell copper? All right, let's look at the daily. This is the weekly, and those weekly unfair lows are at around 216.77, 2.1677. And we've got another kind of daily unfair low down here at 2.1507. So the question is when do you start selling this? I mean, I think we're still within the noise level of both of these particular situations on copper. I like copper from the long side. I don't like how we've closed below there the last 2 weeks, and now we're just kind of bumping up into it. But I'd rather use that DMZ, as I like to call it, between those daily unfair lows and the weekly unfair lows to try to be long this thing. And the real uncle point, I think, is below 215.07 on the short side. So again, the smarter play would probably let it have a weekly close clear back above that weekly unfair low that we spoke of. And it's okay not to pick the bottom here, but this is a little bit of accumulation area in my mind for longs. Yeah, I know. Exactly, RJP. He's saying that somebody in the den saying copper's holding up pretty well despite the dollar, what the dollar's doing right now. So let's just kind of take a look at the dollar. Dollar obviously getting weaker here. But again, the dollar finding support, the long-term support on the dollar, this 93.94. I think we hit it this week, 94.05. So we got within 10 cents of that unfair low on the dollar down here. So, if the dollar gets weaker, copper should have defaultly rallied up a little. I guess a little bit up here, I guess. But let me look at the daily here. Yeah, I mean, I always say those longer term inflection points takes precedence over shorter term time frames down the line. I still like copper from the long side, and it's kind of I think been waiting for. I just copper's a long play in my mind. I don't know how else I can say it. Okay, let's put back the S&Ps. For guys who have joined us late, the main inflection points on the S&P is 2183.50 and 2182.50 up top. But again, I think you're playing with fire trying to short this thing. Down market this morning a little bit on a Friday. Nothing to write home about. You got short-term support at 2174 on the S&Ps. Crude, to kind of recover that, we talked about 47.53 yesterday, trying to leverage against that unfair high on the weekly. If we have a weekly close above there, that's going to be pretty damning for the shorts. Again, I'm out of this trade. It's kind of a wait and see right now. RJP, yeah, I mean, that copper, I think you're looking at something, market's moving up, crude's moving up. At some point, in my mind, copper is just going to catch a bid, and people are going to go, wow, this thing's cheap, and I need to be buying it. And I know that's not a technical reason to be buying it, what I'm saying, but it feels like it's becoming spring-loaded a little bit to me. November beans have come off of that 10.15.70 area, or 10.15 and some change area again yesterday. New crop beans, I'm sticking by that one. I think we could actually go lower on November beans here. There's that 9.95, so we're kind of stuck in that range. I think we can break down below $10 and then kind of have some clear sailing down south. Let's check some stock bellwethers here. Apple, hadn't had any real good signs here to start looking at Apple any other way than blocking out the short side. Had that profile appear below price action about a week and a half ago. Trading 109.08. It's kind of par for the course, just continuing to kind of back and fill, edge a little bit higher. No technical breakdowns really happening yet. If you want to look at these 240s, which I'm showing now, and play around with something against the long-term trend up, you know, you had a little bit of a break a day and a half ago below these 240s, but again, you know, this is the lower percentage trade to be looking at breaking of the 240s right now still. I think you're still looking at this as a supportive type situation on Apple. But that's where you can orient stops against, without question. Let's take a look at our buddy Amazon. All right, so the good news is for guys who are just trying to figure out a place to get in or out of Amazon, you've got a new weekly profile that's probably now going to finally emit itself on Monday morning. Looks like this thing, you know, yellow bar, kind of been teetering around that yellow peel back type scenario all week. But you know, this is one you could find some lower inflection points on the weekly, but again, you know, you've got a lot to contend with trying to short this particular product, and I think you've just got to be looking at it whenever you can find support on it. You just got to play around with the support type scenario. 757.34, we found it yesterday, bounced right off of it. 764. Looks like we're trading pre-market, and let me pull up some numbers. 761. So again, defense below 757.34 on Amazon. The trend is your friend. Let's take a look at American Express. If we can get our numbers to come up here. So that's the situation. I just want you to kind of take a snapshot, put it in your head. I had an email about this. 66.25, top of the box on our daily. 66.25 and 66.67. The short-term and the long-term top of the profiles here. But let's go down into the XLF. We know where the weekly is. We're trading above profiles. The top of that box is 23.58. 24.12 are the daily unfair highs. You know, what do you do with American Express? I don't think you have a lot of edge there. And if you're looking to go long or short, I think you've got much better candidates at much better inflection points. So, again, I think it's a no trade. A lot of times I'll say that. If there's no edge, there's no trade. Let's take a look at the old XLE, as crude is just completely blown a gasket here on the north side. So the XLE, again, you know, here's the broad ETF. There's some of the unfair highs on the daily that were around 67.33. It looks like yesterday we closed at 71. And that 69.03 was that breakout this week above weekly unfair high. So you're probably going, well, thanks for telling me after the fact. Well, we missed a couple of shows at the beginning of the week, so I have to tell you after the fact. But, you know, how is some of the stocks done in the XLE? Let's pull that up. And naturally, it's the most positive breast. Wow, sea of green, huh? Diamond Offshore. So this is one, you know, that wasn't showing a lot of relative strength, had come down into support here, 2059. But really, man, what a harbinger of bad news to have the market and oil move up like this, and Diamond Offshore is still staying below those weekly unfair lows at 2059. So I'm pulling this stock up because, you know, it's shown itself early. We're going to talk about this a little bit more and a couple more stocks in the XLE when we come back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. And a lot of these oil stocks moved up without question. I mean, the XLE just, again, like we talked about, blew a gasket. Here's a daily on Cabot Oil and Gas Company. So, you know, getting above some weekly unfair highs here on COG. There's some other opportunities. You know, we talked about Schlumberger. Let me just pull up some stocks. Let's talk about Southwestern first, SWN. This one's been a little deflating in my book. Not really busting out above weekly unfair highs, but there's been a nice little stock. Hasn't always traded, you know, with the latest, greatest moves of crude oil. But do you take this as, you know what, it's not making new highs? It's not even reaching the weekly unfair highs. Do you look at this as something to short? Here's the daily. That was the weekly we were talking about. You know, I think you've got, again, I mean, you know, you probably have better candidates to short than this one in the oil group if you're trying to trade some kind of pullbacks in oil. It's obviously not one that's been kind of lately breaking out again as crude oil's kind of moved up significantly the last 2 weeks. But again, I like that little stock. It's something that really has found, when you find support on it, and we're kind of in no man's land a little bit right now, you just kind of push the B button there. Valero. Let's take a look at this one. Some of these haven't moved drastically up, but they, you know, some of them had shown themselves early. This has been one, you know, as crude was kind of tanking and we'd come up into these weekly inflection points. This is one where I was considering actually to be a kind of a weaker stock here. So again, you know, hasn't been super painful if you've been trying to short Valero at those weekly unfair highs. Let's take a look at Halliburton, and that's kind of the name of the game. If things don't go your way, what's going to be the least painful trade? Halliburton. So we're coming up into these weekly highs now, 46.17. Hasn't been the weakest oil stock. Let's just take a look at the crude situation again really quick. So as we look at oil, I mean, we're going to have to pay serious attention to 47.53 today. Any weekly close was below. That's going to have to be looked at as kind of a piece of good news for shorts. But again, weekly closes above here. That means that we're wanting to trade outside the balance area on the north side. So what does that mean going back to the scanner and looking at Halliburton? Halliburton's acted a little bit better than oil in general. A weekly close above this 46.17 is going to be super important for this particular stock, and we don't know if that's going to happen yet. We've kind of reached our targets on the retracement and support previously down into 42.51. You got to put the money in your pocket on this one and now wait for that weekly close. We've reached the targets on some of these stocks we've been talking about that have been strong oil stocks, and some of them have worked out relatively well. You just got to wait and see right now. Chesapeake Energy, let's take a look at this one. Yeah, this kind of horse was out of the barn a little bit early, and again proved itself. Already had broken out last week and just had a massive move this week. Guys, stay tuned for Larry. We'll be back on Monday. Have a good weekend.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.